Welcome, everybody, to another episode of the Gold Silver Bitcoin Show, brought to you by the GoldSilverBitcoin.com store. We are more than honored to be sitting down today with Durrett of GoldStockData.com. Don, you are a very followed and respected gold analyst, but I know you also made some calls on Bitcoin early on, and I want to start there with Bitcoin. Why Bitcoin? Why now, I suppose?
Yeah, that's great opening question. So I would say only about, 30%, 25% of gold bugs like Bitcoin. People that go into gold and silver usually do it for more of a less risky. Gold and silver mining stocks are highly risky, of course. But gold itself is considered something that holds its value over time. It's considered kind of a solid asset, if you will. Even though you're speculating on the miners, you still have that underlying value that the gold bugs really like. So Bitcoin is a total speculative asset. So I get a lot of pushback on me being a kind of a pro Bitcoin person. But I've been involved in Bitcoin since 2016. And the first time I did a deep dive, I was convinced. So I worked in IT for 20 plus years. So I'm a tech guy. So when I did the deep dive and I read the type of technology that Bitcoin's using, I was sold. I mean, it was like after, 4 hours in, I was sold, and I've been sold ever since. And I don't think that people really do the deep dive on it. Now, one of the reasons why I continue to be bullish is because the main argument for people that are against Bitcoin is that it's a Ponzi scheme and it has no underlying value. And that's flat out wrong. And the reason a Ponzi scheme is something that has no underlying value. And so it's basically new money is basically pushing out old money, kind of. That's what a Ponzi is. You'd have to constantly bring in new people to keep it up or make it go higher. It has no underlying value, but Bitcoin isn't that way. And so when I see that this is the main argument that people are using, it makes me even more bullish, because it just means we're early, because people are in denial of what gives Bitcoin value. Now, this asset has never existed before. So let's say that you live in one country and you want to move, say, $1 million. You have to pay to move that money. Whereas if it's in a Bitcoin account, all you need is you can put it in your head and memorize it, but not too many people do that. Basically your master key, or all you need is a file, an encrypted file where you have the password to, that has your 25 words, or it can be 12 words or 15 words. You can decide. So I prefer just use a file. So you're basically, you're traveling with a computer, say you travel with a computer, on your computer, you have a file and it's encrypted. As soon as you cross the border, you're taking that money with you, because if you take those keys, you can recreate a wallet. You can buy any wallet that supports master keys, enter the keys, and voila, you have access to your money. That's very powerful. I'm just giving you one use case. That's never been possible before. And the other thing is there's no third party involved except for the Bitcoin network, which is completely decentralized. That decentralization, people don't understand how powerful it is, and that in fact it is fully decentralized. You can't shut it down. The other use case, and there's many, and that's why I say to say that it has no value makes no sense at all, and it's not true. Another use case is that if you're a business and you have a business, you can transact in Bitcoin. So let's say you're in a different country, so you have a different currency. You have to go to a bank to pay for switching those currencies out. So it costs you money to do international trade. But if you do trade across borders using Bitcoin, the risk right now is the Bitcoin isn't stable, right? So you might end up losing money doing it. But over time, if Bitcoin does become stable, Bitcoin is a very powerful mechanism for international trade. And I think that is probably the number one use case. And I'll give another third use case. The reason why I could talk for an hour just on all the reasons why I think Bitcoin has value. The other one is just the ability to have your own money. And it's not money, it's an asset. But let's say you have an asset that you own that nobody else has access to. So if you take it off the internet, you put it on a hardware wallet, no one can touch it but you. It's your money. There's no third party. That it's just like gold. Gold, if you have a bar of gold in the house in a safe, it's kind of your money. It's kind of the same type of thing, but it's liquid and it's transferable. Gold, if you want to sell your gold, you have to go to a coin shop. And if you want to sell $100,000 in gold, I mean, the coin shop probably doesn't have it. Whereas Bitcoin, it's not that currently, and I think it'll continue to be this way. It's not that difficult to convert your Bitcoin into whatever you need it to be. So it's a liquid asset. And then the whole rarity thing, the halving. This is another one I think I should bring up. I know I'm going on here, but it's a huge question. The other one is the fact that currently we mine 900 Bitcoins a day. So if you take 900 and you multiply it by 42,000, it's, I don't have the math in my head, but I think it's about $10 million, something like that. It's not, I'm going to do it right now. So we take let's say $42,000 times 900. This is the current demand. It's $4 million. Is that right? Let me do it again. 42,000 times 900. 37 million. I'm sorry. It's $37 million currently. Okay, so in 2 more years, in 2024, the halving, every 4 years, Bitcoin halves. So the mining total gets cut in half. So if the price stays the same, let's just use, say, let's go up to 38 million, so we have a round number. If it stays the same in 2024, the daily amount of Bitcoin that's mined will go down to $19 million. Then if it stays the same, when we go all the way to 2028, it'll go to less than $10 million. So let's just use $10 million as a round number for 2028. So Bitcoin doesn't go another dime higher. It just stays where it's at all the way until 2028. Just say it just sticks around, doesn't go anywhere, which I think is a very high possibility. In 2028, the daily mined Bitcoin will be $10 million. That is such a minuscule number to make your head spin. Because remember, Tesla wanted to buy $1 billion worth of Bitcoin. $1 billion, right? And they're only mining this is 2028, $10 million a day of Bitcoin. How does he accumulate $1 billion? That's one company. One company, $10 million a day. It's minuscule. So you have this halving coming in 2024 and 2028, and it keeps going. Then it goes all the way to 2032. It just keeps cutting in half. It goes to 100 in 2032. It just keeps getting, the supply just gets smaller and smaller and smaller. So the only way you can buy Bitcoin is somebody else to sell it to you. And Bitcoin is actually, the way it is designed is to hold. That's what we call it, hodling. So it's designed to go up in value. So the argument that Bitcoin is a Ponzi scheme is somewhat ridiculous. The only arguments that are kind of against Bitcoin is legalization and taxation. But that really comes down to what country you're in. So the risk goes up. So in the United States, if they basically ban Bitcoin or they tax it and nobody wants to own it anymore, it just moves to other countries. So that's a tough one. You'd have to literally have every major country in the world ban Bitcoin. And I don't see that happening. So for Bitcoin to really get hit on, a taxation issue. One final word on the idea that Bitcoin has no value. We already are seeing 2 countries right now that are hodling Bitcoin. El Salvador, which is tiny, and Brazil came out and said they're going to hodl 1% of their balance in Bitcoin. They're number 2. This is not the end. We're going to see more countries hodling Bitcoin, throwing it on their balance sheet. Again, $10 million a day, right? So if a country wants to put Bitcoin on their balance sheet, that's got to be into the billions, right? So Bitcoin at $50,000 or $42,000 is just super ridiculously cheap, I think. My target's 250,000, and everything that I've said today basically makes an argument that 250,000 is conservative. So that's my Bitcoin answer for you.
Can you speak to adoption, especially at the level of Fortune 500s, 100s, and the effect that has on Bitcoin?
Oh, I think I just spelled it out, in black and white, that Bitcoin is very likely going to trend higher. So if it trends higher, you're going to see more and more institutions throwing it on their balance sheet, because the dollar right now is losing 10% of its value in a single year. So let's say you're Apple, who has $300 billion approximately on their balance sheet. They're going to lose $30 billion this year. That's a lot of money to be losing. So how do you offset that? Well, you offset it with owning some Bitcoin as a hedge, an inflation hedge. So that's only institutional balance sheets. And we're talking globally again. I mean, you got to get excited. This is the reason why Michael Saylor basically keeps buying more and more Bitcoin. He's more bullish than me. I still think there's a chance that Bitcoin could crash down to, I think 20,000 will hold, maybe 28. I still think we could see this huge volatility, which is kind of a dangerous thing for businesses to be putting this stuff on their balance sheet. I think until Bitcoin gets over 100,000, it's risky to put on your balance sheet because of the volatility. El Salvador is real early in the game. They have to, deal with all this volatility that we're going to see. But once it gets over 100,000, I think that volatility calms down, and I think that's when more institutionals get involved. Now, so far, I'm just talking about institutions as of corporations putting it on their balance sheet. But let's talk about pensions, hedge funds, insurance companies who want to buy it as an investment, not so much as a hedge, but as literally an investment to make money on. That's a $1 trillion industry right there, especially pension funds and insurance companies. They want, 5-10% returns. You can't get that with bonds. Bonds, I actually think the two things that are kind of a risky investment at the moment are stocks and bonds. I think this year you could actually lose money on both, because interest rates go up, the value of bonds go down. And I think with interest rates coming in, that we could actually have a down year on the stock market. Now, and I'm not saying it's going to happen. I'm saying it's possible. So, I mean, your risk reward right now is kind of ugly on the conservative investments, whereas Bitcoin could easily go up 25% this year. I'm saying super easy. A 25% return, that's beautiful, if you're an insurance company.
I mean, there's lots to talk about on the Bitcoin front. For instance, it's on the blockchain, which gives us insight into what's going on in the network in intriguing ways. Can you speak to data and the blockchain and how that has underpinned some of your theses in terms of that Bitcoin could go down to 20K or 28K, which is a number I totally see when I look at the chart with zero charting knowledge, other than I've looked at charts for a while. Mm-hmm. And I can see that with where demand is and these points, it just seems like it could get there. And then also on the 250K side, I mean, when you really look at what Bitcoin's done and where it could go, it's really, I entered into the Bitcoin industry when it was $4 and began participating in that community, and not so much on the investing side. And it seems closer to $1 million than it does $4 to me when you're looking at things on a long enough timeline. So my question was, can you tell me about data and the blockchain and how that underpins your thesis on Bitcoin?
I want to make sure I understand your question. So when we talk about, what do you mean by data? What data are you talking about? Because a blockchain is just a bunch of transactions. So
whatever data you're looking at in terms of Bitcoin.
Oh, okay. So yeah, the data that's going to drive it, the underlying fundamental data, whatever. So a lot of people look at the hash rate and they say they see the hash rate going up and they see that as kind of a trend, a sentiment number. And historically, it's been somewhat true. The hash rate, when it trends higher, does tend to bode well for Bitcoin. Another one that people look at, there's one guy called Willy Woo who's really good at the data stuff. That guy's a total pro. I like to watch him explain how he sees Bitcoin going higher. We're looking at the data. Another one that people look at is how much money is moving off of the exchanges. So basically your demand goes down as Bitcoin comes off the exchanges and there's nothing being transacted. And so you have less liquidity. I forget what is the number one number that Willie uses, but he's very bullish. Maybe not in the short term per se, but I know that in the moderate to long term, he's very bullish on his data numbers and what he's following. I haven't watched Willie Woo podcast in over a month now, so I forget what his main number is. I wish I had that off the top of my head. But for me, another data point that I watch is institutions. Now we have sovereign countries. That's a new data point, right? Institutional money, we had last year, we really only had two big players come in. We had MicroStrategy. They came in, I think 2020 and then 21. And then last year we had Tesla come in. Those are really the only two. I think there's a couple other players, but they're not really as big as those two. So I look at big institutions having a position, and then Wall Street, the big billionaires. So we had a guy, Bill Miller, I think his first name's Bill. I know his last name's Miller. He came in and he basically now his number one holding is Bitcoin, and he had 0 Bitcoin not too recently. So we're starting to see the billionaires start to put positions in. So that's another data point that I watch. Another one is adoption rate. So the adoption rate, Michael Saylor talks about the adoption rate quite a bit. Raoul Paul talks about the adoption rate. So the adoption rate is actually right now faster than cell phones, which is kind of mind-blowing. If you look at how fast cell phone adoption was globally, at the current pace, Bitcoin is ahead of cell phones. So that'll tell you something about the adoption rate. It's flying right now. We'll see if it keeps flying.
That's staggering.
It is.
All right, Woobull.com. What does Willie Woo look at when analyzing Bitcoin price? So some of his signals on his website, and I'm curious if any of these are something you look into, Don, include Bitcoin price models, various price models for Bitcoin, the Bitcoin NVT ratio, Bitcoin's PE ratio, which detects when Bitcoin is overvalued or undervalued. There's Bitcoin NVT price, Bitcoin's NVT price, useful to see the price supported by organic investment. The Bitcoin NVT signal, the NVT ratio optimized to be more responsive, useful as a long range trading indicator. Then there's the Bitcoin VWAP ratio, a useful signal for local and global market tops and bottoms using volume weighted average price. The Bitcoin RVT ratio, a variation of MVRV ratio using on-chain volume as a key metric to find the market top and bottoms. Bitcoin MVRV ratio, a Bitcoin under overvaluation indicator based on realized cap. There's Bitcoin RVT ratio, a volume-based variation of MVRV used to determine market tops and bottoms. The Bitcoin Mayer multiple, inspired by Trace Mayer, a good friend of mine. Trace Mayer's ratio to measure Bitcoin price in relation to its historical movement. Bitcoin difficulty ribbon, a view into minor capitulation, typically signals times when buying is sensible. Any comments on any of that, Don?
Yeah, the one that now it rings a bell. The one that I think that I could be wrong about this, but the one that Willie Woe gets excited about when he talks about it, I get excited about it, is the volume on chain. So basically, that's basically your transaction volume. And so when that transaction volume, when it starts moving, it usually pushes the price. So yeah, transaction volume tends to be pretty huge because that's when, so basically right now we've been stuck at 43,000 now for a week plus. So there's basically no volume. But once it gets to, 44, 48, 50, you're going to start seeing volume start flying. And that's when, depending on what the volume does, that's when things really get exciting. So that those volume numbers, if you get emailed, the volume every day, you're probably it's going to not only coincide with Bitcoin probably trending higher, but it's going to somewhat coincide with, how far it's going to run. So for traders, that on-chain volume tends to be pretty significant.
Any comments otherwise on Bitcoin?
Yeah, I definitely probably have some additional thoughts on it. We did cover it pretty thoroughly, though. Okay, the first thing I want to say, so we were talking a little bit about Bitcoin and cryptos before we move over to gold or stocks or something else. First thing I want to say is that crypto, in my opinion, is still a speculation play, because we're in the third phase of Bitcoin. The first phase was 0 to 20,000. So we went up to 19 and basically crashed all the way down to 3,200. That was phase one, in my opinion. It was all driven by retail money. It was me and you basically buying it. It wasn't institutional money. Then from 20 to 50, it was early institutional money. So that was MicroStrategy basically pushing it to 50,000, basically by himself. Now is the most important phase three. Phase three is 50,000 to 100,000, and it has to stay over 100. So we really haven't gotten through phase two yet, because we're not over 50. So we get over 50 and stay over 50. That's when we enter phase three. So we're still in phase two, in my opinion. We get to phase three, we get over 100 and we stay there. That is the most important phase. And if we don't get over into phase three, if it doesn't hold, the risk level is high. So you have to think of it as a speculative investment. So if it's a speculative investment, that means you only invest what you can afford to lose. So people that are these maxis that have 100% of their, I call it cost basis. So let's say your investment portfolio is 100,000. It's not what it's worth. It's how much money you invested to get to 100,000. So if you invested 50,000, your cost basis is 50,000, not 100. So if your cost basis is 50,000, then you only want to invest maybe $5,000, which is 10% at the most. You don't want to go more than that. Anything 5 to 10%, whatever your comfort level is, 3, 5, 10% is really where you want to be, so you can sleep at night. You don't have to worry about this volatility. I'm only at 6%, but the reason I'm at 6% and not 10% is because I got in early. So I got in early enough where my gains are big enough where it's only 6% of my cost basis, but I probably would be 10% if I didn't get in early. So I think that you need to recognize Bitcoin and crypto as risky currently. Now, if we look at the alts have more risk than Bitcoin. So the alts are like Ethereum, Solana, DOT, these type of Cardano, these type of kind of somewhat solid projects, but they're still trying to basically get as, have a risk level the same as Bitcoin. I don't consider Bitcoin a cryptocurrency. I consider it a kind of a unique liquid asset. It's first generation blockchain. A lot of people laugh at the technology, but the bottom line is what makes Bitcoin valuable is its governance model. No other crypto has a governance model that is so decentralized and so solid. Basically, there has been no significant upgrades to Bitcoin in 5 years. And that's because the governance model makes everything slow as molasses. Whereas everything else, you can change it they can basically put their groups together and plan out their changes and put a change plate and everything. Those are alts, things that are like that. The reason why they're alts is because they don't have that real strong, solid governance model that creates decentralization. So those are the alts. Then you have the S coins. The S coins have even more risk. The S coins are like Shiba Inu and Dogecoin. These really, XRP. They're highly, highly risky. Those are the S coins. So you have 3 different flavors of crypto, and you have to know what you're in, but you need to know that they're all risky. So that's my spiel on crypto. So now we can move on.
Yeah, not so easy. So Bitcoin is not a cryptocurrency. Can you discuss that in more detail?
Yeah, sure. If they make it legal tender, so in El Salvador it is, but until they make it legal tender, it's basically a pain to use to spend and buy stuff, because every time you spend Bitcoin, there's a taxation involved. There's a taxable event for every single time you spend it. So basically you're spending an asset, you're spending a commodity. So it's not money, it's not a cryptocurrency, it's just an asset. So it's basically a ledger of basically numbers. It's a ledger of numbers. So people say, well, it's not real, it's not physical. But if you hold a hardware wallet in your hand, you are holding those physical keys. Well, they're not really physical, but you're holding those keys. Those keys are real. Now you need a computer to send them to somebody, but as far as they're virtual, sure. But in my opinion, there's no difference for me to have a contract with a piece of paper on it that's faxed. I mean, not faxed, it's scanned into a digital file. And basically that's real. Okay, I have a contract and it's scanned and it's signed, it's in DocuSign. There's no difference between that and basically a Bitcoin key that's basically approximately 72 digit alphanumeric number that I own. I own that number. It's not really virtual because it is ingrained. The only way that you can put a digital something onto a magnetic file is it has to basically be embedded on that magnetic, it has to be on there, right? It's not really virtual, it's real, it's on there. And I own it, I own that. And basically people say, well, it doesn't exist. But if you hold it in your hand, it's no different than holding a bar of gold in your hand. It's the same thing. So from my perspective, it's just an asset. It's a liquid asset, first of its kind, that's transferable between people. And here's the key: proof of ownership. I can prove that I own that because I own the key and nobody else does. I'm the only person that owns the key. This is the reason why NFTs are going nuts. NFTs are now, last year, 12 months ago, nobody even knew what an NFT was. Today, the NFT market is well over $1 billion. I don't know what it is up to, 30 billion. It's huge, right? That's 12 months. It's going to keep going. Mike Tyson just said that he's buying NFTs. I mean, Mike Tyson, we have all these celebrities buying these NFTs. They're not going away. NFTs have nothing to do with Bitcoin. NFTs is second generation crypto. And this is another one of my pet peeves that people, they basically say that cryptos are worthless, cryptos are going to nothing. But what they don't realize is that we're now into third generation technologies. These DLTs, digital, I want to get it, transaction.
Ledger technology.
Yeah, digital ledger technology. I couldn't get it.
So actually a distributed ledger.
Thank you. Distributed ledger technologies. That's how new they are. These things are potent. They are powerful little dudes. They didn't exist. This new technology doesn't even use blockchain, but it came from blockchain. It derived from blockchain. Basically, these DLTs, people said, wait a minute, these blockchains, yeah, they're great in idea because they're decentralized data. Decentralized data has the potential to make things more secure. The Bitcoin network is probably the most secure network on the planet. So people said, whoa, this is cool. We can have something that's super secure, but we need to speed it up. We need these transactions to speed up. So this what these DLTs are doing. Right now we're up to 2.5 seconds for a transaction. On the
DLTs, you're sacrificing security for ease of use in some cases, or for speed. There's some give and take there. And so, this is my Bitcoin maximalism show, actually. So I get to this is all orange all the time here.
Right. I'm converting them all, I'll tell you that.
So because I find now there's a lot of overlap between precious metals investors and Bitcoiners, even if they are sometimes at odds, which is silly. But I want to talk a little bit about, in order to bridge over to the gold and silver world, ask a couple questions. Has Bitcoin sapped precious metals demand to any degree?
Yes, but I'm going to go back to DLTs and I'm going to come back to gold.
Deal.
You talked about trade-offs. The number one trade-off is the cost. So in order to use these decentralized networks, you have to pay for them. They're not free unless you build your own. But for instance, one that I like is HBAR, which is Hedera Hashgraph. But you can't build your own. It's proprietary. It's not open source, because they recognize if we make this thing open source, all of these companies will go build their own, and then we won't make any money. We invented this thing. We're going to make it proprietary. And some people, oh, well, this is a proprietary. We're not going to know this is. But hey, for me, it's just a software application as an investment. And I'm actually glad it's closed source for that reason. Other people can come up with their own DLTs, but if it's like, you have to pay for it. So right now, in order to do a transaction on HBAR, it's like 0.001 cent. It's less than a penny. It's a tenth of a cent. But you get the security. You can pay for it. And so this is the new type of technology that are coming. If you want to have that type of, for instance, and then we're talking about Web3, and that's the one thing about Maxis. I mean, you're really going to ignore the concept of Web3? You think Web3 is not going to happen? Of course it's going to happen. I've heard Maxis say, well, Bitcoin can do all this stuff. Total baloney. The reason why Bitcoin can't do all this stuff is because the governance model. The governance model does not allow Bitcoin to evolve fast enough to build Web3. Not even close. You have 1,000+ projects out there trying to get involved in Web3. Now, Web3 does not have a definition yet. There's going to be Web3. It's going to be a big, huge umbrella of different types of projects. It's not going to be defined clearly for years, but the bottom line is it's going to happen, and it's going to happen through all these alts. So the Maxis are missing out on this stuff. I mean, that's my opinion, is because they're just focused on this one thing. They're focused on two separate assets. One, Bitcoin, in my opinion, and the alts are like apples and oranges. They're two different types of technology. Yeah, great. Be a maxi on the base layer of an asset that could be a monetary money. Fine. But don't ignore these other technologies as investments. You can if you don't want to be an investor. But these are things that could make 100x returns, whereas Bitcoin's not going to make 100x return. So there's tons of opportunity in these alts. The metaverse isn't going away. That's all going to be built on this stuff. So for people to, they're comparing apples to oranges. Okay, so now let's go into gold being disrupted by crypto. So I got the Maxis are all over me right now. So now the gold bugs are going to be all over me because I cross over, right? I do both. My website's Gold Stock Data, gold and silver mining stocks. I only have 6% in crypto. So that means I got a ton in gold and silver. I mean, I'm over 80% in gold and silver assets. So I'm totally heavy overweight in these gold and silver. But believe it or not, I see gold and silver as a once in a lifetime investment. Once this bull market peaks, I'm getting out. I'm getting out of gold and silver. I already have an exit strategy. And yes, Bitcoin is going to eat into gold. No doubt in my mind. It already is. It will continue to do it. There is going to be a war. I've been saying this for, at least 2 years. There is going to be a war, a battle between gold and Bitcoin over SOV, store of value. Who is going to dominate SOV? Who is going to be the SOV of the future? Most of your maxis say it's definitely going to be Bitcoin. Most of your gold bugs say it's definitely going to be gold. So the war is already beginning. You already have people taking sides. And the gold side, they basically say it's already won. And there's no chance in heck that Bitcoin's going to win this war. But once, and I say the war is beginning, but it hasn't really started. I don't know if that makes sense. For me, the war doesn't really begin until Bitcoin gets to 100,000. Once it gets to 100,000, that's when you're going to have people sell their gold and buy Bitcoin in a big way. And that's when gold, and I think, is going to hit a peak. I don't know when. That's why I see it's a once in a lifetime thing. And I'm selling all the way to the top. I don't know if that peak's going to be, I think we're going to at least get to $3,500 gold. I'll be selling gold from 2,000 to 3,500, but very little. I won't sell very much from 2,000 to 2,300, very little. Then from 2,300 to 3,000, I'll sell the bulk. And then from 3,000 to 3,500, I might keep 10% at 3,500. But by $3,500 gold, I'll be at least 80% out, maybe 90% out. And the reason why is because I really believe in cycles, and I really believe that gold is going to hit a cycle high here during this bull market. Now, I could be early. It could go all the way to 5,000. It could go all the way to 10,000, and I can make a mistake. But if gold goes to 5,000, I'm going to hold on to some silver miners and some physical silver just in case. Not a lot, but I won't be holding physical gold, unlike I'll be holding physical gold. But yeah, I think that Bitcoin is going to eat into Bitcoin, and we're going to start to see that around next year when Bitcoin gets to 100,000. So the war starts.
Tell us, what was that?
The war between Bitcoin and gold starts next year.
Okay, so can you chart the course to $100,000 Bitcoin? What does that look like in your view? You said next year.
Yeah, so I think it's going to happen in two phases. Phase one, I don't know when. It's hard to time these things, but it's all about cycles. So we're currently at 42,000. This current correction, I think, will end sometime in the first quarter of this year. I don't know when. It might start going back up in January, but sometime in this first quarter, I expect this correction to end, and we basically start running, and then we get over 75,000. I don't know where. So I don't think we'll get to 100. So somewhere between, say, 75 and 85, somewhere in there. So it's going to be a pretty good run. So I think this low is like 28. So we're going to, the current correction, I don't know where it got to, 39, I forget. The current correction we're in right now. So we're looking at it basically doubling from here, and then correcting again. And then the next correction, it's hard to predict how long it will take and how deep it will go. So we don't know the timing, but I don't think this next run will go over 100. I think it's going to go. We're going to make a run to 75 to 85, correct. And then that next correction will basically be, I think it's going to be short-lived. And then we make the run over 100 sometime next year. But it wouldn't shock me if, we're talking again January next year and we're still in the 70s or 80s. I mean, that wouldn't shock me. It wouldn't shock me when we're in the 30s. I mean, Bitcoin kind of has a mind of its own. The one thing that I will say is that if you look at the last two halvings in 2012 and 2016, Bitcoin is nowhere close to the multiple that those two halvings had. That's the reason why Max Kaiser said that it was going to 220, because he thought that it was going to have the same type of multiple that those corrections had. But what he missed, well, this current one could maybe do it. I mean, maybe he's right. But one thing that I think he missed was that the first 2012, the multiple out of 2012 was massive because it was early innings with Bitcoin, right? And so if you look at the future value, Bitcoin was basically just showing us what it was going to do long term. And so the next halving in 2016, it wasn't going to have the same type of multiple as 2012 because it didn't have to, it didn't have that type of leverage that it had at the early innings back in 2012 when it was super cheap, right? That's when it ran, from less than 1,000 all the way to 1,000. I forget exactly what it went to, but it was, it was a massive run. If you look at the halving, at the day of the halving and to the peak off of the halving, if you look at that from 2012 up and then the next one, 2016 to 2017. So I think that this multiple will be less than the multiple in 2016. I don't think it'll match it, but it should go over 100. So I think this halving will go over 100. That's my expectations. It just doesn't seem like we've gotten high enough out of the halving. Looking at the technical chart, we'll have to wait and see. But I don't think we're going under 20. And if we do go under 20, under 10 seems really, really, for me, not. I don't see it as a possibility to go under 10. Some people think we could go under 10. I don't think it's not a possibility to retest 10, but on a likelihood scale, I think it's a very, very minor, 2% maybe, something like that. And then 20,000 is like 4%, 28 is like, 10%, 15%, something like that. I'm just throwing numbers out there. That's just my gut feel.
Well, we've talked a little bit about the gold versus Bitcoin debate. You think there is a war coming? The war is on the breeze, I suppose, when it comes to Bitcoin and gold. I'm curious, do you have any other comments on that? What about the gold versus Bitcoin debate generally? My opinion of the gold versus Bitcoin debate is that it undermines the value of a diversified portfolio, and that these are commodities that anyone who invests in one should be looking at the other as a hedge. I think that they are both increasingly being viewed as safe havens by different generations, but nonetheless, they have very different attributes. So that is why I think they are a hedge of one another. Can you speak to the gold versus Bitcoin debate any further than you already have?
Yeah, sure. So again, I've been a gold bug since 1991, long time. So I know the bull market, and I'm not, Max Kaiser basically jumped off the gold bull market. He's basically saying he's selling all his gold. I'm saying that gold's going to go higher, at least 3,500 and maybe 10,000. So I'm looking at this the current bull market that started in June 2019. Started in 2019. I thought it was June, July 2019. That bull market, unless we get under 1680, so 1680 is kind of for me, that's the bear market trigger point. Because if you go under 1650, I think you go all the way down to 1550, somewhere there, 1520 to 1550, and that's where the bear market basically we could have one. I don't see that. I don't see gold going under 1680. So I'm looking right now. I'm kind of bullish on gold for the miners. So if gold goes to 3,500, the miners are going to fly. So I'm very bullish gold at the moment. But as we get into this decade, 2025, 2028, 2030, I don't think that the gold bulls realize the risk involved, especially buying gold at, say, 2,000, 2,500, 3,000, buying gold at those prices. I don't know. It's going to be interesting to see. Now, the East loves gold, no doubt about it, right? The Chinese and the Indians love gold, and they could keep the price up. My problem with gold is I see gold and copper, basically, gold and copper being very sluggish, kind of going with the economy, somewhat, stuck, if you will. So we have this blow-off run here going up to 2025. I think we're going to peak somewhere around 2025. It could go all the way to 2027. Once gold peaks, I see it basically getting stuck. That's why I'm not bullish gold long term. So 2025, 2027, I just see it getting stuck. And, silver, I'm a little more, bullish on, because I think we're going to have shortages in silver, but gold doesn't have that issue. You're not going to get shortages in gold. But silver, definitely, you get 2030. I mean, silver could be $1,000 if things go nuts and you can't find it. So I'm more bullish silver than I am gold. But I just think that if you're a total gold bug, you need to make sure you have some silver. And I think that once you get to the second half of this decade, I'm not sure how well gold's going to do as an SOV. Maybe it does good, but maybe not. And here's the kicker. Here's the one that I really think that gold bugs are really ignoring. And that's your millennials and your Gen Xers. They're not gold bugs. Their parents are to a certain extent, but they're not. They didn't live through the 1970s. They don't remember that, that craziness where, gold went from $35 to $850 and gold was basically a really good hedge. Now gold isn't acting so much as a hedge. I mean, look at all this uncertainty we have today, and gold hasn't done anything. We had no inflation I'm saying the government numbers We didn't have any inflation until like June of 2021. And then inflation took off in the summer and gold did nothing. Nothing, really. I mean, gold was at 1800 in the summer, still 1800. So, how great of a hedge is gold really showing itself? And I actually think that's kind of going to be what we're going to see after this run. Now, the run that's going to happen, in my opinion, what's going to push gold to 3,000, 3,500 and possibly higher is uncertainty and fear. The big money only buys gold when they have to. And they've been making money off the stock market. The S&P averaged up 23% in 2020, 2021. When you're making 20% on your money, you don't have to buy gold. And when the Fed is basically backstopping the markets, every time the markets go down, they basically inject liquidity. I mean, you can basically see it on the money supply. Every time the market goes down, they inject liquidity. So the Fed has their back. So the big money players are like, why do I need gold? I don't want gold. I only buy it if I have to. So we get the uncertainty, which is going to start, I believe, this year. Once the uncertainty starts, then the big money players are going to buy gold. And that's when you get the run. That's when the run starts. And once you get to $2,100 gold, it's going to be really, really hard to stop it from running. 23, 25, 27. It's going to be really hard to stop it because once you get to 21, that's when the fear kicks in. Why is it 2,100? That's when the Fed loses control. And once the Fed loses control, then people are going to have to buy gold. The big money guys will have to buy gold. And that's when you start to see it running. So it's fear, uncertainty. And fear, uncertainty is systemic hedge. People have always hedged with gold as an asset hedge against kind of inflation. Not so much systemic, but gold today is more of a systemic hedge of uncertainty, a systemic hedge on US bonds. For instance, the two big assets right now that have unknowns are gold and interest rate, not gold, I'm sorry, the dollar and interest rates, right? So the 10 years at 1.8, but nobody knows what it's going to do in the next 6 months. There are a lot of people that think it could go to back to 1.3. So a lot of people think it can go to 2.3, right? Both directions. And here's the kicker. Here's the uncertainty. They both are using the exact same argument for it to go in both directions, right? They basically say that if the stock market goes down, the interest rates are going to go down because people are going to go for a hedge. And the same people are saying if the stock market goes down, the dollar is going to go up because of uncertainty, the lack of faith in the dollar. So they're using the exact same arguments. And they're using the exact same thing for the dollar. It's crazy. We're in crazy land right now. People are using the same arguments for both directions. I haven't seen this uncertainty ever. You go back to 2008, it wasn't like this because back in 2008, we still had a strong dollar. We still had a strong U.S. economy. The Fed was in control. We didn't have inflation. It's a totally different game right now. This is weird land we're having right now. Really, really strangeness. And so nobody knows what the dollar is going to do. Nobody knows what gold's going to do. Nobody knows what interest rates are going to do. We're in weird land. And weird land uncertainty is good for gold because the fear trade is what drives gold higher. And I've been saying this. Once gold and silver start running, it's going to be the mother of all returns for people that are in miners. I mean, this is the generational thing I've been talking about. I've been talking about forever. People, you've been talking about that forever. Yes, I have. But I've been patient as well. I mean, I have my website since 2012. So basically 10 years of, nothing. But here we go. Now we're ready. So we'll see what happens.
Can I keep you till a little bit after the hour, or do we have to stop right at?
Yeah, I'm good. It's
okay.
Today's kind of it's Martin Luther King Day. Everything's closed.
It's true.
It's a quiet day. It's a good day for a podcast.
Happy Martin Luther King Day. That's one of the a thought leader I learned about very young in school. That is the United States that I learned about. What MLK stood for, MLK Jr. stood for. Go ahead.
Yeah. I'm talking about Martin Luther King. So in my opinion, America lost its innocence in the 70s. So I'm a writer. I write on a lot of different genres. I'm also an investor, but I'm actually more of a writer about kind of the direction of America. I also write a lot about spirituality than I am an investor. I'm more of an expert in spirituality and than I am in gold and silver. I've been writing books on spirituality since 1990. I've been studying it, well, kind of 1989, but I have a book called The Path Forward. If people want to know what's going to happen in the next 10 years, 20 years, read that book. But going back to Martin Luther King. So I really believe that the 60s is when the United States lost its innocence. And when we killed JFK and then we killed his brother Bobby, we basically destroyed the path forward politically, because those were the two guys that were basically going to bring America together and basically run things from the middle, run things from a cohesiveness, run things from agreement, run things from basically consensus. Martin Luther King and Malcolm X were both basically, Malcolm X was not quite as much as centrist, but if you listen to the stuff that Malcolm was saying, he wasn't that far off what Martin was saying. But Martin Luther King, in many respects, was a centrist. Listen to what he says. He was not a political leader of the left, the progressives today that are basically very divisive. If you listen to his speeches, he was talking about unity and coming together as a nation. And we've basically, and that's the innocence that was lost. Martin Luther King was a fantastic example for the type of political leadership that we need today, and both of the Kennedy brothers. And so the middle has basically been hollowed out. It has totally been hollowed out, right, from both the left and the right. And I've said this, and it was over. In the 60s, once the 60s ended, America was over. Now we've just been watching the slow, basically dying of the American culture, the American society. I wrote a new constitution because our current constitution, and now they're ripping it up, our current constitution isn't going to solve our problems. So I wrote a new one. It's on Amazon if anybody wants to read it. And it's basically how I wrote it from the context of how do we solve all of our problems. Now people say that's a utopian idea. That's impossible. Well, read my Constitution and tell me that it's not possible. I believe it is possible. Now, the only way it would work is if one state seceded and then used my Constitution or used a lot of ideas in it. But I think all of our problems are solvable. I really do. But not using a political ideology of the left or the right. Those won't work because they're too divisive. The only way that you can work is through basically consensus of everyone. It has to be consensus of everyone. And I think it's doable. But that's kind of, we brought up Martin Luther King, and, I think he was a great leader, but I think that, again, I just don't think that that's the type of leadership we're seeing today.
I have two questions I want to ask before we close for today on finance. One is about the case for $1,000 silver. The other one is on the junior and the gold stocks, the junior mining and gold stocks. But is there anything else on the topics that we've just touched on that you want to discuss? Whether that be like, for instance, the Kennedys, Robert F. Kennedy Jr. comes to mind, who is a leader in modern U.S. times, or perhaps the new Constitution you wrote.
I'll just say this today. There are 0 new leaders today that I've seen that are really discussing what the problems are and what the solutions are. And when you read my Constitution, you'll see that. And I'm not sure if I did any politics in the path forward. I think I did a little bit. But the ideas that I espouse in that new Constitution book are not being espoused by any leader today. None. 0. There's not one political leader out there. And that's the reason why I say I know it's over. Because there's nobody out there. And plus, most of my ideas are, they're basically somewhat radical, I guess you would say, even though they're not left or right, even though they're just different. I'll give you one. For instance, how we run the businesses today, the corporate model, if you will. So how the corporate model works, I completely redo it. And nobody's talking about that. How do we completely redo the corporate model? How do we empower basically workers? So you talk about that, it sounds somewhat, leftist, you're going to completely redo it. But the way that I do it somewhat on a way that you wouldn't say that it's, communist type of, it is still highly free market, but the way that you do it. So the one thing that I would do is the workers themselves, I would take it to a 40-hour work week. And anything over 40 hours is overtime, but everything over 40 hours is optional. Nobody has to work over 40. If you want to work 40, you get to work 40. And then basically working from home, optional, that type of thing. And the workers themselves, you'd have like 3 workers on the board. Even though they're basically not, you might have to expand the board, but you have to, and there's no unions. So we basically do away with unions. The workers and management work together as a team. It's basically a team environment. Then the next thing you do is you flatten the pay scale. So you only have 5 levels of pay scale. So the very person on the very bottom is getting 20% of what the top guy is. So you might have, the top guy's only getting 500. There's no more of these billionaires. That's gone. But if you own multiple, you can own multiple businesses. But if you work there, if you actually work there, you have to own it. But I talk about the different ways that we can keep people from being, super rich, fix the 1% problem. But the first thing we do is we want an income equality. So all the corporations, basically you have this flat pay scale. So the flat pay scale just eliminates that. If you get a job, you're basically, there's no more minimum wage, because if you get a job, you're going to be paid well. But no more of this, management gets all the money basically. Now this won't work for like less than 50 workers or less than 25 workers. So that would all have to be determined. But we need to completely redo the business model. And then the whole taxation. I basically redo all taxes. For instance, there's no more property taxes, because if you own a house, you can't own a house today if you owe property taxes. The people that own the house are the people you pay the property taxes to. So there's no, so we have to do away with property tax. That has to go, right? They have to figure out another way to get their income. But I do that all through fees. Now you can tax, water and sewer. Sure, you can tax that to death. Phone bills, those are all usage tax. Usage taxes are fine. But people can, use less water or whatever in order to stay in their house. But we have to have ideas like this. No one's talking about, these are kind of radical ideas of how we fix our problems. And I have tons of them in my Constitution. So I wanted to bring that up. So thanks for letting me go into that. So let's talk about $1,000 silver in the juniors.
Make the case for $1,000 silver.
Sure. So my target price for a silver is $150. And I think the reason why it's $150 is not really, it's 2 reasons. One is because I think the GSR, the gold silver ratio will shrink. So as gold goes up, gold goes to say 3,000 and it shrinks to 20. That's like $60, I think. But I think that silver the GSR will shrink dramatically because of shortages. So where the shortages are going to come from. So right now, last year, investor demand was about 50%. I mean, the last 2 years, investor demand, I think, averaged somewhere around 40%. Historically, it's only about 25%. So you have supply of silver is about 1 billion ounces, and you have they estimate about 200 million ounces of recycled. So and production is about 800 million. So if you got 1 billion ounces and 25% for investor demand, it's 250 million. If you double that, investor demand goes to 500 million ounces. That is a lot of silver. And there's not a lot of above ground 1,000 ounce bars. So if we stay there, and I think it's possible to stay there for 2 more years, somewhere around 40, 50%. 50 is a little high, right? But if we stay at 40%, 400 million ounces of silver from investor demand. Now, what is investor demand? Investor demand is your net ETF gains. So you have people basically buying the silver ETFs and then selling them. So the net gain in the ETFs, and then you have all of your retail sales. And then you have people that are taking delivery off the COMEX and people taking delivery out of London. That's your retail demand. And so that's your 400 million ounces. So if people are soaking up these 1,000 ounce bars, I really think that once you get to $35 silver, that the retail crowd is just going to go nuts wanting to buy silver because people hate silver when it's cheap. When silver's $20, 25, even when it was 15, nobody wants silver. Once silver gets trends, I'll give you a perfect example. In 2021, my website went nuts because everybody was chasing the trend. The same thing will happen when silver gets to 35. All the retail people, basically what I call the blue collar crowd, the blue collar worker, he can't afford gold, or he can only find a few ounces of gold, but he can afford to buy silver. And those are the guys and gals that are going to buy silver once it starts trending. It gets to 35, they're going to start smelling a double. This thing's going to go up to 70. I can double my money. And they're going to start buying it up. And that's when you're going to have shortages. So shortages can push silver to somewhere, over 100. Let's say 100 to maybe 300. 300 is kind of at the upper range. 100 to 200, somewhere in there, just shortages alone. The only thing that can push silver to 1,000 is inflation. So that's a possibility. There's a book called The Mandibles that came out, very prophetic, that basically said that foreign countries were going to force the United States to pay back their bonds in assets other than dollars. So in other words, they couldn't print their dollars to pay them back, because when they printed their money, it just made it worth less, right? So they were devaluing their dollar to pay them back. And in The Mandibles, they basically said, nope, you can't pay us in dollars anymore. You got to pay us in something else. And in The Mandibles, I think they could only pay them in certain assets, certain currencies, gold and silver, right? So in that type of
scenario, we have our number one export of lead. So
right. And that's a good point. I actually think that the military is going to start shrinking this decade. And once the military shrinks, let's say the military shrinks by 1/3, 2/3, then that argument's going to, we're going to start losing that argument, the ability to, push countries around and tell them, you will accept our dollars, right? When we lose the ability to tell them, force them to accept our dollars, then it gets a little dicey. And that's when silver goes to 1,000, potentially could go to 500, 1,000, is the dollar basically crashes. And then you get this inflation, that type of scenario. Basically, you get craziness. To get silver over $300, you need craziness. But I think shortages alone could get it to 200 plus.
And some of those shortages would come from demand from green energy sectors, correct?
Possibly, but I don't think that's it. I think it's all going to be the retail crowd. The green energy crowd, that's kind of actually baked into the cake. You're looking at, right now they're over 100 million ounces a year. Right now, the green energy. When you talk green energy, we're talking everything green: solar, batteries. We're well over 100 million ounces already a year. So that's probably going to creep up to 200 million. But that alone is not going to create the shortages, because the real growth is going to be your retail crowd. They're just going to soak up supply.
Mining stocks. What do people need to know about mining stocks today?
Okay, so I've been doing this for a long time, mining stocks. 2004, I started investing in juniors. I wrote my own book, 2009-10, because I couldn't find one. And that book, basically, you can go to my website, and there's a link there on the top that says book. That book is basically a textbook on how to invest in gold miners. So my preface here is that I've been doing this for a while. So I kind of have an idea of where we're at for miners and where we're potentially going. So for gold miners, the gold industry right now is actually very healthy. For gold miners, the break-even cost is right around $1,300. So their margins are about 500. That's the average. Somewhere, $350 to $500 an ounce is their margins. That's very strong. Most of your high-quality miners have all-in cost of $1,100 to $1,200. Some of them are below that, like Agnico Eagle. They're like 1,000 or less. So their margins are like $800 an ounce. Huge margins. That's a big miner too. So some of your higher quality miners have even, better margins than, 1,300. So my point is that the gold miners already are healthy, very good margins. The odds of gold going below 1,700, 1,680 at this point in time are kind of low. And if things break the way I think they will this year, it's going to look even better for gold not to go below 1,700. So even if gold went to 1,600, which doesn't look like it's going to happen, the margins would be good there. So in order for the gold miners to really get hit hard, you'd have to have gold go down to 1,500, and even there, they're still going to be profitable. So they would get hit. They would get hit, no doubt, but not super, super hard. I mean, if you're an investor, you could live through that. My point is that the downside for gold miners and the gold producers, the quality ones, is actually the risk reward is actually at a pretty good place right now. Some would say it's at a fantastic place at an valuation level. So now my point was this: every time gold goes up $100, their costs stay the same, and we are having more inflation, but inflation is not going to go up that kind of go nuts, if you will. Yes, diesel prices are going to hit them a little bit, but their margins, and I'm watching their costs. So far, their costs haven't went nuts, but I'll have to wait every quarter we get an idea of how much their costs are going up. But let's just say every $200 that gold goes up, the margins are going to go up significantly. So the margins for the miners are going to kind of explode, if you will, if gold goes to 2,500, 3,000. Let's just take some of the best of the best. So let's look at Agni Eagle is getting ready to buy Croken Lake. So $1,000 margins, you go to $2,500 gold, they're making $1,500 an ounce. That's huge. That's going to bring in buyers. That's going to push the market up. They're going to be the driver, if you will. They're basically they're currently paying about a 3% dividend. Their dividend is going to probably double. So Agni Eagle will be paying a 6% dividend, probably somewhere in that neighborhood. That's going to get people's attention. So you're going to have a lot of money that's going to start moving into the miner area. So the majors will lead. Agni Eagle is a major. They're going to lead. And then you're going to have the mid tiers come up, and they're going to get a lot of excitement going as well. So then we're going to look at the margins. So what are the margins? When I talk about margins, I'm talking about what is the free cash flow multiple. So I talked about Agni Eagle having a $1,500 an ounce margin. So if they mine 1 million ounces, what is that? $10 billion in free cash flow. Their margin is going to be anywhere 25x for a company of their value. They're probably going to value 25x free cash flow. And that's huge versus what they're valued at today. Then that's at their current today, 25x, 25x. This is the top, right? This is the elite. So those multiples are going to go higher. Because once you get to $2,200, $2,300 gold, more people are going to want to buy the stock. So the multiples are going to go higher. So Agni Eagle is going to go somewhere north of 30x. I don't know if it's going to be able to hold it, but basically you get this type of exponential growth. Now, exponential is a big word, right? You're going to get multiples of growth. So you get the free cash flow multiple, which goes up, and then you get this additional, 30x potential. My point is that the gold miners could just do incredibly well at $2,500 gold. And if you keep trending, if you go 26, 27, 28, 29, if gold keeps trending, it just blast off city. Now, everything that I just told you, you can multiply by 2 for the silver miners. Because the silver miners, the GSR is going to shrink. The GSR right now is about 75. The last run in 2011, it got down to 38, 39, I think, below 40. This time, I think and silver was only up for a couple months. It never had a chance. The GSR didn't even have a chance to shrink. I think this time, the GSR, if it has a chance to shrink, will shrink down into the low 30s, maybe even the 20s. So you got a 2x return on the silver miners. So those are the type of returns that could happen. And I'm not saying it's going to, but this is type of generational stuff I'm talking about. Sorry for the long answer, but that's what I do.
That's what I'm here for. Any comments on anything we've talked today about?
No, I think we're a little, that was a little long answer. So I think I better quit there, but, everybody knows where my website is. Follow me on Twitter. Just search for Don Durrett. It's Don Durrett at Twitter is my Twitter handle. I'm on there every day. So if you want to follow gold and silver mining stocks, you can follow me there. And Justin, thanks for having me on.
Pleasure's all mine. Thank you so much, Don. We've had the honor and privilege today of speaking with Don Durrett of goldstockdata.com. You can find his Twitter at Don Durrett, 2 R's, 2 T's. And he's an author, investor, and he runs goldstockdata.com and also has a wealth of information about Bitcoin, which we spoke about today. Thank you so much, Don.
Appreciate it. Thanks, Justin.
Pleasure's all mine. And thank you, everyone, for listening.